Seth Carpenter is sitting right here with us. He's the global chief economist at Morgan Stanley. Seth, weigh in. Do the markets now get back to their own business, or are they still in the business of trying to discount what the Fed's going to do?
To take a page from Kevin's hymn book yesterday, my answer might disappoint because I am not going to be as entertaining as those two going back and forth. I think it's a little bit of a false dichotomy here. The market has always reacted to data. I think we can play the tape and look at non-farm payrolls reports. We can look at CPI reports, and the market, if there's a big surprise, the market has always reacted to it. Now, saying the market should react to the data, now what the market thinks the Fed's going to do with the data, I don't think that's where we're going either. So if we think about a key market, Fed funds futures, what's the market pricing in for the path of policy? They're still going to look at the data and then ask themselves, is this going to cause the Fed to hike or not?
Seth, can I ask you something?
Absolutely.
Do we need the Fed at all? Do you not listen to Warsh and go, well, why doesn't he just turn? There's almost this implicit sort of repulsion at the idea, and this was a little bit what Rick was alluding to, that this group of people should be setting interest rate policy. And why are we trying to figure out what they're going to do? Because they're doing something that is in some ways arbitrary. It is based on the best information we have, but it changes all the time. It's their best judgment, but it's just that. It's judgment. They've been wrong, obviously. Some have suggested going to more automatic rules and things like that. I think Warsh's comments are going to invite more questions about that, whether he intended that or not.
I mean, I think absolutely there are going to be lots of debates. And I think one of the things that Kevin Warsh did yesterday was to say we should take a fresh look at everything that we do. Do we have the best models for inflation? Do we have the best idea of how to communicate what it is that we're doing to maintain accountability? That sort of systematic rethinking, I think, is a fantastic idea. Doing away with the central bank, I think history has lots of examples.
We have to do away with it, but is there a better way for the FOMC? Is this the best? And maybe it is the best. Tribunals of a few people making the best judgment is usually, Steve, the way to go. I just wonder, I think this is going to invite more discussion around it.
It certainly does. But just a quick point of information. The market is not always perfect either. The market makes plenty of mistakes. And when you look at the track record
Not mistakes. It goes through repricing. Okay? A mistake means at the close you don't get a check. You always get a check on the close.
Fair enough, Rick. Well, the market goes through repricing then / what I would call sometimes, not that often, but mistakes. And the track record of, for example, forecasting the inflation in the pandemic found the private sector no better than the Fed. Now, the Fed made a mistake, and what we know from that is that they've gone back and tweaked their models.
It'd probably be something closer to the 10-year or some market-based thing that's discounting in real time. I don't. There's
but the 10-year is the guys who are trading the 10-year. That's why Seth has a job and makes as much money as he does, because the guys from the 10-year call up Seth and say, Seth, what the hell's going on? What should I be doing here? Right, Seth?
But, Steve, the stock market hit its low a month after the pandemic started, and the panic and the closing things down and everything that we did for the next year and a half, the market had already made its low. It was right all along. I think that's what Rick is saying. You didn't have to look at anything else.
Well, I mean, I think the market clearly takes lots of signals from lots of different places, but there's plenty of volatility in prices as people take in new information from all over the place. There are lots of examples of the market getting carried away in one direction or the other. And so if the statement is over time, the market gets it right, I think that's fair.
What'd you say, Rick, the last 6 weeks the market has told you?
Crude oil, okay? It better than any expert I've ever heard the last 2.5 months. Crude oil futures gave you the advance warning that you should be long stocks if you believe stocks were a good buy should the conflict be ending sooner rather than later. Now, we could debate if the ending's a good ending or a bad ending. That's not what I do. I'm Mr. Market. The fact that it's ending is a dynamic the market paid attention to, and the crude oil futures, they were your canary in the coal mine.
Would the committee under Warsh weigh the market signal appropriately with whatever they think the data is going to? If they're saying we're just going to react to the data, the market is the first place where that is trying to be figured out, to everyone's point here. Then it shows up in the data. By the time it shows up in the data, we've already moved on to something else. So I wonder how he's going to incorporate that approach.
No, I mean, I think First, I think of that as less of an abrupt change in how the Fed operates. The Fed has always had folks who are looking at what's embedded in market prices, talking to market participants, trying to understand what's going on in the market and in the real economy at the same time. So I don't think it's an abrupt change in that regard. I think it's a change in communication style, but less in overall operation. You have to try to take some idea of what the market thinks. The market had already, though, been pricing in roughly one hike for this year, and that probability went up, and now the market's pricing in more than one hike. The median dot sort of was one hike. We don't know what Kevin was thinking because he left that dot out appropriately. And so I think, though, was that the right inference for what the Fed's going to do? We're not sure. And we won't be sure until we see how things turn out. But I would say the evidence suggests that inflation might actually substantially undershoot what the committee's forecast for inflation is. And if they get those data and they say, wow, inflation's actually lower than what we had written down, oil prices have come down a lot, the effects of tariffs that had been pushing up inflation a lot, that's already in the price. It's going to come off over time. And so I think all of those things are issues that the market's going to take some time with. The market takes a narrative. The market tries to get in front of where things are going. The narrative can shift. And then the narrative can shift.